Bank. Siddharth Purohit of Angel Broking also joins in. Siddharth, what's the recommendation? The commentary from the management is quite positive. Would you recommend investors to subscribe?
Yeah, we have a subscribe recommendation for the issue, and I'll just like to outline why we like the issue and the bank particularly. As you see, the management was talking some time back that the growth has been quite phenomenal in the last 4 or 5 years, ever since the new management took over. Certainly, it has come on a very low base, but what I believe is that banking is all about managing risk and raising capital and deploying that capital in an efficient manner and generating returns, and all these parameters has been kind of justified by the management. And then look at the loan book, which has grown by almost 45-47% in last 3 years time, and even despite such high growth, the absolute base is just 21,000 crores odd as of now. So what I am trying to say is that the base itself is quite small. Even if it has grown substantially, the base being very small, there is a huge opportunity for them to grow here onwards. The market size also is growing for private sector banks. One part I would like to highlight is that no doubt there is competition within the private sector banks, but certain PSUs particularly have been going through a lot of trouble in terms of asset quality, and they are managing they're going through a lot of stress, and that's why they are not able to really concentrate on the loan book expansion side. And I think banks like RBL can really take the opportunity of expanding their loan book in the meantime. If you talk about their liability franchises, let's say CASA ratio of 18.5% is still very low compared to some of the private sector banks, and that I see as a positive sign rather. Despite CASA at say 18.5%, they have managed a ROE of say close to 11%. And I think if that improves, the margins can improve, and that can add to the bottom line.
Okay.
So there are a lot of positives left in the operations going ahead, and that's why we like the bank basically.
All right, Siddharth, thank you very much for giving us that comprehensive view on RBL. I just have a couple of niggling worries. Their current and savings account was 35% in FY11. It has dropped to 18%, as Rajiv Ahuja told us. So they have grown by term deposits. That's